What happens to the markets during a government shutdown? Now, besides Omicron, Fed tapering, and inflation, there's this other specter kind of haunting the markets recently, and that's the potential for a government shutdown. Well, the question is, should investors care about this? Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. The facts are government shutdowns are nothing new. In fact, the last government shutdown wasn't even that long ago. It took place from December 22nd, 2018 to January 25th, 2019. And that 35-day span was the longest and most expensive government shutdown in history. On top of that, it wasn't even the only government shutdown of 2018. We also had another one from January 20th to January 22nd earlier that year. As you know, we had these disputes over deferred action of childhood arrivals. Besides those, over the last 4 decades, we've had government shutdowns in 1980, 1981, 84, 86, 1990, 1995, 1996, and 2013. So the budget deadlocks went out of vogue for a brief spell during the early 2000s, but just like mom jeans and clogs, these are back in style. So what happens to your portfolio if, this Washington gridlock moves from I-270 all the way up to the halls of the Capitol? Well, I can tell you as a longtime, DC area resident, government shutdowns, they're viewed as holidays by government employees for the most part. Obviously, for people in need of government services, though, shutdowns can be tragic, and we are still in the middle of a pandemic. So if a government shutdown were to take place, obviously that would add some more pressure. For the markets, though, shutdowns are often fretted over, but ultimately they prove to be completely inconsequential. Investors have historically shrugged them off as soon as they begin. That's due to the fact that almost all of these in the past have been relatively short or have impacted only, a portion of the government. For example, the 4 shutdowns of the 1980s lasted a day or less. Now, through the 1990s to today, these shutdowns have become increasingly historic because they've become longer and longer. Nonetheless, the S&P 500 has performed quite well during these federal closures. Even during that longest U.S. shutdown ever, which we saw, 2018 to 2019, the S&P rallied a hair over 11% from the morning of December 24th, 2018 to the market's close on January 25th, 2019. Now, that does not mean it's all sunshine and puppy kisses, right? There are moments of panic when the closures are announced, but always remember, use these to your advantage, right? The S&P has tumbled an average of 0.87% on the first day of trading when a shutdown began. The biggest declines of more than 1.5% were in 1996 and in December 2018. And that last one, obviously most of us remember quite vividly as it was the worst Christmas Eve session in market history, right? But that was like a perfect storm of events. The government shutdown was announced over the weekend. There was these escalating tensions between the US and China. So that first day of trading after the government shutdown was announced was pretty chaotic, right? The S&P tumbled 2.7%. But on December 26th, the index then notched largest single day gain at that time. So the takeaway is this: if the government shuts down today, tomorrow, 3 months from now, whatever, the initial gut reaction from investors always tends to be panic. But in the end, these are practically non-events for the markets. The S&P continues to charge higher during those federal closures, no matter how long they may last. And so don't fear a government shutdown might sink your portfolio. Historically, the opposite has been true. That's the one silver lining in this entire swampy holiday mess. Well, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thanks for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's the high returns.